Welcome to one-on-one-trading.com. My name is Troy Epperson, and in this video we're going to cover the chart of the week. And I hope at the very end you'll come over to our website, one-on-one-trading.com, and check out the services that we provide. This is the ES chart, this is the June futures contract, and this is a daily chart. So you can see that since May, that's this line right here, 1st of May, we peaked out at pretty close to all-time highs. And the market has been really going up since the December sell-off and pretty much nonstop. And then it's turned over, which is, markets ebb and flow. However, what's particularly interesting to me is that the fundamentals right now are contradicting the most recent market activity. This week, we have had virtually 4 or 5 days in a row that have been up. Now, this was up only based on the open. It did gap down, so it's technically not an up day. So we've had 4 up days in a row, making a major comeback based on what? What did we have that went on this week? Well, we found out today, Friday, that the jobs report was only 75,000 new jobs. This is horrendously bad. We also heard earlier in the week that the European Bank, the European Federal Reserve, so to speak, talked about having an additional QE, which is basically QE, a long-term repurchase agreements, and that they were not going to have any rate hikes, interest rate hikes, till at least mid-summer of 2020. On top of that, we have the China trade war. We have the Mexican tariff trade war that has just recently developed this week. And we are at the top of a business cycle. We are 11 years since 2008 financial meltdown. But as you can see right here, the market is completely ignoring all of these facts. In fact, we are on our way back to retest the highs that we had from the 1st of May. This is absolutely ridiculous. Why is this big move up? Well, on Tuesday or Wednesday of this week, we heard that they might delay the Mexican tariffs by some fraction. And now, of course, today they're saying it's going to go ahead and go into place on Monday. Whatever the catalyst was, yes, we were oversold, but a bounce was certainly necessary. But this is insane. This is ridiculous. The market is completely ignoring why the Fed might lower interest rates. Last few days, we've had lots of talk from Fed Chairman Powell that he may be open to a lowering of interest rates. So the market rallies. Like, are you out of your frickin' mind? So yeah, lower interest rates are good, but the question is why are they thinking about lowering rates? Because the economy is slowing, because it's at the top of a business cycle, because we don't have any jobs, because Europe slowed way down, China and Mexico we've got tariff wars with. It's a really bad environment. Nobody looks at the reasons why the Fed might lower interest rates, which is ridiculous. The economy is slowing and the Fed is afraid. The Fed is afraid, therefore they're going to lower interest rates. This is not good under any circumstances, but the market is completely ignoring. This is where the fundamentals do not match the market action. So this gives us a gigantic opportunity to put on a hedge. So if you have stocks, you can put some puts, buy some puts, sell some calls, or you can short. And this is a beautiful opportunity for that. In the next few days, next week, we're going to have a great opportunity to put on some really big shorts, because this market is going to turn over because we have so many things wrong with it. And the Fed lowering interest rates by a 1/4 point is not going to fix all of these things that are wrong with the economy. The market is in complete denial. one-on-one-trading.com. Thanks for watching. Come check us out at our website, one-on-one-trading.com.